I didn't see Robert Mueller make it into your market commentary note of the morning. Does that mean you don't think there are any big implications for investors?
I don't think there are any immediate big implications. I think this will now potentially free the president up to maybe get a good trade deal. You know, you fought up one side, you think you've been vindicated. Now, if you're really going to run for election, you have to have a little bit of a plum there. Secondarily, if his aides can convince him, some of this tariff talk and other things have kind of dragged on the global economy. And that's been a bit of a drag on what we're seeing here. You know, it's places that are trade sensitive, like Germany, starting to pick up their manufacturing. The reason the market was spooked on Friday was that their very bad number. You haven't seen one since 2012. It meant that their economy is in contraction. Not that it's slowing. It means it's beginning to shrink. So the president has got to begin to think about, can he begin to make some trade deals and maybe perk up the economy all around.
If the narrative here for the markets is slowing global growth, why are small caps, why is the Russell 2000 underperforming everything?
Well, that's an amazing thing. I mentioned that in my comments this morning. I think what you're seeing is that the small caps have less liquid markets, and people decide not so much that they're going to be hurt by the trade problem, but if the market's going to pull back because of a trade problem, the stocks in the Russell may get hurt worse because they don't have a deep, deep bid underneath them.
Art, what is the market factoring in right now when it comes to Brexit, and how much risk is there depending on what outcome we see?
I think the market's not factoring in an awful lot on Brexit, and
that sounds risky.
It's borderline ominous, because what's going on is the end of this week was the original target date. They said that they would extend it out, but only if they voted for Prime Minister May's original package. If that doesn't happen, then it's going to be shortly into April. And it's beginning to look more and more like we will wind up with a no-deal Brexit. And I think the markets, both here and in Europe and in London, are not prepared for that. So, you know, people have been saying since the original vote, what's a big deal with Brexit? Look, the market didn't really go crazy. Well, that's because it hasn't been implemented yet. So wait until it gets implemented and watch the fallout from that.
So Art, what's the next key catalyst for the stock market?
Well, I think right now the market's trying to see how it feels. It's taking its own temperature. It's taking its own pulse. You saw this morning we sold off. They started to look like they were going to test the 200-day moving average in the S&P, which is down around 27.55. They didn't get all the way down there. So they're moving up and down. I'm a little concerned that unless we get a new stimulus here, whether it's from Apple or somebody else, that we're going to have a bit of a problem. It's looking, this is cocktail napkin charting, folks. This is not professional. But on the cocktail napkins, there's a hint that we're getting a rollover top here. So I'm going to watch the market carefully for the next 2 weeks.
Feels like there's also two camps. One that are freaked out by what's happening with the bond market, the yield curve inversion, the super low yields. I think Japan was negative 0.095 today, multi-year lows. And then those that say, hey, look, it's accommodative. That fueled the bull market over the last 10 years. Which is it?
Well, it's a little bit of a problem in that we're the only major nation that has not gone into negative territory on the yields. And the question is, will it wind up being pushed there? Now, I think the media pundits were all over the inversion. This is kind of a forced inversion. You know, you'd like to see a 2-year, 10-year or something much bigger to be looked at than one that's a couple of weeks versus a 10-year. So, and the other thing to remember is that every inversion is not followed by a recession, but every recession is preceded by an inversion. So is it worrisome? Yes. Is it a guarantee? No.